Oh, you're recording this. Oh, crap.
All right. So we had a commercial baker that didn't show up last week. So now we've got a better commercial baker.
Yeah.
We literally had someone like this not show up. I don't know what happened. He like fell off the face of the earth. So be some Wells Fargo so you can understand.
Oh, yeah. Okay, this is good.
So, right, we talked risk management, investment banking, the commercial banking. So I've bumped the dates on those ones that you've got until the end of the week to figure out to do a write-up what you heard about today. Shay Munk, former student, graduated about the time I got here. Maybe I got here about 2012. He said he graduated in 2011. So
It could have been 12.
something.
Yeah.
But anyway, been doing a bunch of banking for years and for different firms, so he can tell us a lot about some of the different career paths, some of the different banks, the difference between a big bank and a smaller bank, and a whole bunch of things. So get your questions ready. Looks like he brought some treats as well. So he came prepared to impress, I guess, today. So I'll just turn the time over to you, Shay.
Yeah.
And we'll go from there.
So yeah, just to start out, let's just all grab a cookie because it's 1:30. You guys probably have had lunch. You need some sugar. So seriously, come get a cookie and then we'll get started.
We'll experiment, see which kind of cookies you guys like.
Thank you so much.
Yeah.
What's left in the end.
So I didn't grab all the varieties, but there was a cornbread, cinnamon in there, chocolate chip, just a regular sprinkle, and a Nutella. Yeah. So Whitby was one of my professors. He was probably one of the best professors I ever had. I feel like when you're going to school, there's a lot of professors that are just there to do their job and not really help you excel. I always felt like Whitby was really there to teach and help you learn. So I would highly advise you to use him in the class and out of the class if you ever have any questions, because he really is a genius. Like, he's a really smart individual.
I'll pay you later.
Okay, thanks. But yeah, so I graduated from Utah State in finance. I had a younger brother. We both went through the same time. He got a degree in finance. Had a dual major in finance and economics. I didn't want to go the extra route and take the 3 or 4 other classes to get my economics dual major. I just went with finance and was like, let's go. So out of college, I went up to Washington and worked for a bank in their capital markets department. And I worked as an underwriter and credit analyst on syndicated deals. So really large business deals between 20 and like up to 120 million. It was really interesting. It was really good exposure to get right out of the gate. Did that for about 2 years. It was called Northwest Farm Credit. So the United States has a farm credit system that allows people in the agriculture industry to get they have a better pricing matrix that they kind of discount for the agriculture industry, just because the margins are so thin there all the time. But we had people in our portfolio like Scott's Lawn Care. We had like Treehouse, the apple juice company. But like these bigger, larger financial institutions, they don't want to hold on to a whole $120 million portfolio with just with 120 million with just one borrower, because it creates a lot of risk issues within the bank. Like if that company goes down, you're SOL and you're holding the basket for the whole package. So what a lot of financial institutions will do is they'll package up portions of the loan and they'll sell them to each other so that as a team, the loan is still there, but there's more players, there's more hands involved. So like if a business goes down, they won't take the whole financial institution down with it. Like you saw in 2008 with that whole shenanigan. So I did that. We worked primarily with unqualified audits. So who in here has a finance degree or is going for finance? Okay, there's a lot of you. Is anybody doing accounting? Okay, one off. Economics? Okay. So random theory guy, right? But so within that, sorry, I lost my train of thought. So as you're graduating, that might be something that's interesting to you. We'd work with unqualified audits, which is basically, it's like a Big Mac at the end of the day. So like a Big Mac, it's beautiful. It's put together extremely well. There's been a lot of hands touched it and it's super processed. So I always thought that's how the audits, the financial statements that I would read always felt. It was like, yeah, this is beautiful. It's very well put together, but it's super processed. So like as a credit analyst, it's really hard and it was really difficult to kind of get down into the weeds and really figure out what's going on within these businesses. So if you do like working bigger deals, and you think working on like, I don't know, $50-60 million loan is fun, that might be something that might interest you. For me, I like a more personalized experience. We would have the opportunity to go out and visit these companies and kind of talk to the owners, the shareholders, and see what the business is doing, but it was still at like a 10,000 degree view. I did get to eat like $100 steak one time. That was really cool because like these guys, they'll do whatever they can to keep that 120 million flowing, you know? So like $100 steak at the end of the day, that's okay. We'll pay that. Here, you eat that. So I've done that and it was a fun experience. Like I said, they fly you out and you get to visit with these customers and spend a few days with them. But at the end of the day, I wanted something where I was more local, where I could really talk to a person. I guess the other side I should say is when you I worked on the purchase loan side of the portfolio. So another bank is representing the company and then our bank was just holding the note. So really any financial information that I wanted, I had to go through their bank and then their bank had to talk to the customer. So like you're always getting like a roundabout answer. It wasn't like a straight answer straight from the borrower. But like, I don't know. I asked one guy, a senior analyst there one time, like what he enjoyed so much about the job. He was working on this big deal and I couldn't believe how big it was. And he said, you know, at the end of the day, it's all relative. The financials are the financials. I mean, the ratios are still the ratios. So big or small, it's just what's your cup of tea? What do you like to do? So having stated that, I worked big deals. I've worked a little $5,000 deal. I've helped the mom and pop shops, and there's a flavor for everybody in commercial lending. I came back and I worked at Zions Bank as a underwriter. Well, technically they call it a portfolio manager. There's lots of fancy names in the finance industry, lots of fancy titles, but a portfolio manager is just another name for a credit analyst or an underwriter. So I came back and I worked at Zions Bank for a couple of years and did the same thing. Worked on loans, big and small. Like we had some big agriculture loans in our portfolio, but I grew up farming, so farming's always been like kind of the heart of what I like to do, just because I feel like farmers are most of the time they're pretty honest, they're fun to work with. But I did that for a couple years.
What's the difference between those two in terms of kind of culture? Big team, a small team versus a big team.
Yeah.
You go from a small, kind of one that focuses on farmers to a much bigger institution. How was that?
Yeah, that's actually a really good question. So that's something that I would take into consideration when I'm planning a career with a certain business, is depending on the size of that institution, they'll invest a lot more into you because they want you to stay. The more they'll invest into you, the more you'll respect the brand and stay with them. So like at Northwest, we had a training to get started for about 2 weeks. And then you enrolled in an analyst program for a whole year. And then at the end of that, then you could start to actually build your career. Zions Bank was the same way. They have a really good training facility, and they send you back for weeks at a time to go and better understand financials, underwriting, relationship building. So I would definitely take that into consideration when you guys go out and look for a career. I'd say the two differentiate just by the locality. Like Zions Bank is a huge brand here. Northwest Farm Services, they're spread across 6 states. Zions Bank, like a lot of you think that Zions Bank is just here local, but they are, through 2008, they consolidated with a bunch of banks and bought them out. And there's like Vector Bank in Texas and, I can't remember what it's called in California. Anyway, so and when you move into a financial institution like that, it does give you the ability to move around within the company once you're established. Another thing to take into consideration. So even though I worked at Zions, like you do have the ability to reposition yourself, say, I want to go to Texas, but I've already built kind of a background here at Zions. Like there is the flexibility that you can move around within the company, if that makes sense. So yeah, that's a great question. Yeah, sure. Yeah, good question. Yeah, that's great. So a lot of people think that when they go to a bank, all they have to do is give them your name, your tax return, you got a credit score, and away you go. There's a lot more that goes into it, especially on the business side of it. Like for me, I would take your balance sheet, I would take your tax returns, and I would probably take an income statement from your P&L. And I would analyze that and make sure that, hey, she's actually doing very well and she can service this debt that I'm about to give her. Because at the end of the day, if I give you a loan and you can't pay me back, who's SOL? I am, okay? Like, I mean, at the end of the day, your credit score might get hurt, but really it's the financial institution that's really going to take the hit. Again, that's, I think a lot of what you saw in 2008 was there wasn't a lot of hand holding, but there was a lot of money going out. So like my job would be to look at your financials and say, yeah, they've got a great credit score. They're cash flush. They're not super leveraged, and this would be an okay loan. Good question.
You also mentioned underwriting.
Mhm.
So that's, I mean, can you just explain, like, I mean, that's kind of what you did there is underwriting, but that's another name for it, is kind of checking to see that everything looks good.
Yeah, same thing when you buy a home. So an underwriter is going to gather all your information and they're going to look at your credit score. They're going to make sure that your debt to income ratio, it's called the DTI ratio, is within a certain metric. They're going to make sure that like Bill can still pay his car loans, his credit cards, and the mortgage at the end of the day. They're not just going to give it to you based off your credit score. There's a lot more that goes into it. So you have to gather all that information and kind of analyze it, make sure it fits inside the box. Because the box is a lot tighter these days than it has been in the past. So you got to make sure it all fits inside the hole. So if that makes sense.
The same idea, but doing it for businesses, for loans, for commercial properties, for farms, for, you know, anything that you can borrow money on, kind of going through that same process. Yeah,
that's another good point. Like the cool thing about loans is you really don't have to have, like, I don't know, a specific piece of collateral to do a certain loan. Like say, for example, a home equity line. Does anybody know what a home equity line is? Go ahead.
It's like a line of credit that borrows against the value of your home.
Yeah, perfect. Yeah, right. So a lot of people don't know that, hey, I can basically use an open line of credit against the house that I'm staying in. And not only that, I could use that money to invest it into a company that I want to build. So there's a lot of flexibility in what you can do with a loan. It's not as black and white with the actual outcome of the product as a lot of people think it is. Another thing that I've done is after I did that, I went to D.L. Evans Bank and helped them open their first charter here in Utah. So a charter is basically a bank's ability to register and open up a new facility in a new state, because you have to register with the state and the state has to okay you to come in and finance within their state boundary. So we opened up their first charter here in Utah, and it quickly became one of the most profitable branches for the bank as a whole, and that's out of like 37 branches. And a lot of that is just based off relationships. In commercial lending, it's super focused on relationship building with clientele. It's not necessarily I'm going to take a call, get this guy's loan done, and we're done. If you have, say, a $6 million loan out with a gravel pit, you're going to call upon that borrower and see how they're doing. Like me and Whitby were just talking that interest rates have increased substantially, which may in the end really slow down development. And guys that have these larger gravel pits are kind of thinking now, well, I've been moving all this material out of my pits, but all of a sudden, all my trucks that are running might slow down because these developments are also slowing down. So then they have to make critical decisions at this time to kind of see how and what they're going to do with their existing fleet, whether they speed up or slow down. So that is an open conversation that you continually have with your customers. And you try to be there for them and continue to help them make critical decisions that'll impact their company for years. So I did that for a while. I actually quit and I went and I bought some Lendio franchises. So can somebody Google small business loans for me? And tell me what the first 5 are on your SEO. Anybody? Just shout some out. Lenders. So use like Google Chrome, just search small business loans.
All those computers out there and nobody can figure out, no one can do a search.
What'd you get?
I've got like lending 3, small business administration, some ads for like the funding hero, cactus, blue line.
Yeah, okay. Anybody else have anything different?
SBA loan.
Okay.
Got Bank of America.
Okay. So what you guys are going to see is there's not a lot of big banks. Like Bank of America is like the exception, but there's not a lot of big banks that are really after a tech platform. And like you guys today, if you have to do something with a bank, how do you do it? Online with your phone, right? So I kind of saw that and I was like, you know, these baby boomers that are about to exit the business industry and sell off their companies, most of them are going to get purchased by people like you and me, like the younger crowd that do enjoy tech, that do enjoy those efficiencies. So I personally don't want to go into a bank to service my account. And I work at a bank. Like I'd rather just do it on my phone. It's 10 times easier. So, and I feel like that's where the industry is going as a whole. So when you're making these searches, businesses like Capitus, like Blue Vine, those are super tech driven banks. And And this is another thing that I would consider for you guys if you were going into the finance industry. Tech is growing substantially right now. Instead of, let's say, going through all the analysis for underwriting and working on loans, like let's just say my computer can do it all for me. There's software available these days that can actually analyze all your bank statements. So you submit them, and then I get a printout, and it says, okay, he had like 5 days of non-sufficient funds, but his business is cash flowing like 50 grand. And he's got this other loan out and this other loan out. So within 5 minutes, I've got a whole sheet and I've got all your ratios. I know exactly where your business is going. And then I can also search with the state and see if you have any liens against your business. So one of the other beautiful things about fintechs or financial technology companies is they have the ability to fund extremely fast. Like I could fund a deal, $200,000 deal within 2 days. And that's crazy fast compared to with a standard bank like Bank of America. You're going to spend time working with the loan officer, and you're going to go through all your financials, tell them your story, and really go through the whole shebang. There's caveats. It's a risk and reward scenario. So if, say, you're giving me a loan and there's no collateral behind it, and I haven't been in business very long, is my interest rate going to be high or low? High. Why? There's more risk. Perfect. Okay. So that's one of the caveats with a faster fintech loan most of the time. So I've given loans out as low as like 3%. I've also given loans out as high as 70%. And that 70% is due in 7 months. So you're going to get hooked up with an ACH loan. And with that, you're going to pay me back every day. I want to see your bank statements, and I'm going to be connected to your bank statements, but I'm going to make sure that I'm getting paid back. So I want payment every day to verify that your company is solvent and liquid. Because the first day that you miss your payment, I know that Bill over here is in trouble. And he might need a discussion here, because I'm going to get my money back at the end of the day, no matter what. So I did that. And through Lendio, these franchises that I bought, we had the ability to broker out with multiple lenders like Capitus and Blue Vine are on the portfolio. I actually still own those franchises, and my wife has to operate them though, because I'm at the bank. So yeah. Any questions about that?
With the innovations of fintech and all that stuff, are you afraid at all that maybe parts or maybe all of your job could disappear? Or
Yeah, that's a really good question. Yeah, no, I agree 100%. I think that brick and mortar buildings, like, has anybody seen what's happening with Wells Fargo and all their branches?
they're good, like actually
Yeah, but first they had to exit. Why did they exit?
Are you talking like the big scandal? Like
No, not necessarily. Not necessarily. But like you see a lot of these bigger banks closing their branches. Why is that? Exactly, right? Everything's online. Like we just said, you guys don't want to go in a branch. I don't want to go in a branch.
When's the last, who went into a branch? When's the last time you went into a branch? Anybody been into a branch lately? Okay.
yeah, I work.
Oh, you, okay, if you don't work in a bank, who's been in a branch to do a transaction? How long ago? Recently? Okay. So occasional, right? Occasionally you have to go in. There's some things you just can't do otherwise, it seems like, but for the most part, we avoid branches.
Yeah, because you try to be as efficient as you can be with your time. And so fintechs give you the ability to really maximize your day. So I saw that, and I still see that. I continue to think that's where the industry is going to go. It seems like
So I'll put you on the spot here. Your job. At what, is it automated at some point? Give me a timeline.
I mean, I still think that no matter what, there's got to be somebody that hits the approve button based on a dollar amount and a risk ratio. So, but on a smaller loan for say something under 100 grand, like in terms of a bank's overall position, like 100 grand is really not that much. Like to you and me, it's like 100 grand. Like to a bank, they're like, I think that would be more of an automated thing. Like, and even on some of your car loans, I know that you can just go on to like some of these credit unions and just submit like your title information and they'll look at your credit report and it's all automated and it's just like you're approved. Here you go. I really do think that's where the industry is going. It's just way more economic to do it that way.
What about the relationship side of it? I mean, you said a lot of it is currently based on relationships. That you can't really have a relationship with, right? Some AI that processes your loan.
Yeah, that's a good point.
Talk about that tension there. Is that,
Yeah,
because I've heard other bankers say, look, I'm not going away. There's so much subjectivity in what I'm doing that you can't necessarily automate it.
yeah. I think it depends on the lender and it also depends on the bank's risk appetite. And the borrower is going to pay for it either way. If you want a cheap loan that's super well priced, your best bet is actually build a relationship with a banker and really tell them your story because they'll go to bat for you and try to give you the best pricing. If you want to, if you're like, for example, I had this guy and he's getting a divorce and he hadn't taken care of his stuff and he needed like 150 grand and it needed to be like the next day. And he's like, or else I have to hang out with this woman for like another 5 or 6 months. He's like, you got to get this through. So we pushed it through the Lendio platform, found him a lender that was like, absolutely, let's do this deal. Got him a line of credit. It was at, I believe, 16% interest, unsecured though. So he submitted his bank statements. The AI scanned them, said, yeah, this is an okay deal. Let's do it. And he got his line of credit. And so did that. And I don't know if he still has it, but yeah, it was fast. It was fast and that's what he needed. And there's situations where you'll have that. There's also situations where banks can't do a loan because basically you as a borrower are terrible. Like your credit score is below say a 680. It's really hard for any of your local banks to grab onto that and run with it because the risk associated with the loan isn't appeasing to them unless the rate's like 20% to offset that. So another thing with these fintechs is by looking at your bank statements and analyzing them and seeing your actual cash flows, they can offset that risk. You're still going to pay for it because you have a lot of risk associated with you. So like they're gonna take that risk and price it into your loan. So that's where you'd see a loan at like 60-70%, but like your credit score is at like 550. So
kind of a question, what's a credit score that you would see like, oh yeah, that helped that?
generally like a 680 is you're okay. And that's about with any bank. Yeah, about anybody will take you at that point. If you want like supreme lending, supreme pricing, like anything above a 750, then you're gold. So that's another thing. If you guys haven't started to build your credit, highly advise you get going on that. If you can get a credit card and get it rolling and you have an auto loan, do it. Because like that credit can help you into developing other things down the road, whether you buy a house or like you did want to start your own company. It's so beneficial. I've seen a lot of students that get all the way through college and they're like, I did it without ever taking out a loan. It was like, good for you. Your credit's terrible. I can't really help you with anything. So, and it doesn't have to be anything substantial. Just having a credit card and paying it off every month, making like a $10 candy and drink purchase, and then have it on an auto payment. So it's just always revolving. So your credit's always building. So that way, when you do need it, it's there. And you look great. But yeah.
So how does like the nature of like commercial banking differ from that, like local lending, like say like auto loans, mortgages, things like that? How does commercial banking differ from?
That's a great question. Yeah, good question. Commercial lending, I would say there's a lot less red tape. The regulations aren't nearly so picky. You can mitigate a lot of the issues with ratios and the risk associated with a certain loan. Because of 2008 and that whole collapse, you saw the government really ramp up all these regulations, and those are still all in play. And so it makes it a lot more, not difficult, but it's a lot more work to do, say, an auto loan, or like a mortgage is a lot of work. There's a lot of eyes that see it. So for me personally, I would go with commercial route just because there's a lot less regulation. You don't have everybody looking at your loans. But I don't know. Does anybody here? What do you do at the bank? For what bank? Oh, okay. You work at the Pioneer? Okay. Well, good. Okay. Well, good. Sorry. I was hoping you would say somebody else, but that's all right. I can't remember what I was talking about. Oh, with your question about the different regulations. And a lot of that too is associated with the size of a bank. So the bigger the bank, the more heavily regulated they're going to be. Like Zion's is, what are they, 60 billion these days? Just huge, just a huge bank. And what I work for now, we're 3 billion, much smaller, much less regulated. With a bigger bank, you're going to have a lot more people analyzing your loans, making sure that everything is good to go. But at the end of the day, you might actually learn a lot more out of the gate. With a smaller bank, you can get a little bit more creative on things because the regulators aren't so highly invested. Because like, say, I'm sorry, I keep bringing up 2008, but a lot of that was just due to people not being regulated and making stupid loans. So there is so much more invested by like the US economy as a whole to make sure that the bigger banks don't fail, just because if they do again, like it would just be catastrophic to our economics here in the United States, like it was back in 2008. So
How many of your loans do you keep, does the bank keep versus?
oh yeah,
Sell or syndicate?
it
Maybe just thought process. I maybe just said things that they don't understand. So maybe just talk about that process.
so again, when a bank gets up to a certain size with a portfolio, say that, I don't know, just trying to think of an example. So for example, you're an onion processor. So you don't grow the onions, but you just take them and you process them. And you have, say, and you're one of the biggest processors in the United States, and you're making millions and millions every year. But with a bank, you have about, I'd say about 20 million is your cutoff when people are going to start trying syndicating loans with you. That's probably about the ballpark. Is once you get so big, a bank's like, okay, I got to diversify and I got to cut you off and sell you, if that makes sense. Sell a portion of this loan that I have with you. So then you got two banks working on the same loan, if that makes sense. Sorry, that was a very good.
Sell it to, or how does that work?
A lot of banks will have a list of lenders that they work really closely with, because they build a lot of agreements with each other. And they say, basically, if you give me 20 million, I want to take 20 million of yours, just so our portfolios are kind of even. But yeah, they have a whole list. I guess you could say it's kind of like how mortgages are packaged up and sold too. Like if you were to package up a bunch of mortgages and sell them like they did, like they still do today, but yeah. But, any other questions?
What does your like day-to-day work look like, and what's like work-life balance and hours and all of that?
That is a really nice thing. I'm glad you asked that. You can go work at Goldman Sachs and you can put in a lot of hours. Or you could work at a local bank as a commercial officer. You can be involved in your community and really try to help grow it. I usually get to work at about 8:30 and I usually leave at about 5:30. As far as staying late, I really don't ever do that. I'll always answer my phone for you if you need a call. I mean, if you need something, and I'll make sure that if you need to close by a certain date that we'll hit it, but it's a lot less stressful. We'll put it that way. I have 2 little girls and I'm married and I get to see my kids before I go to work and I get to hang out with them when I get home, which is a really nice thing. Versus some other institutions, you'll be working 12 hours a day. So it's kind of a give and take, but yeah, great question.
What's that day made up of though, in terms of?
Okay.
What are you doing on an average day, or what are the different things that come across your desk?
So I'm a branch manager right now. And so I'll go into work, I'll make sure that all the transactions for the previous day, all checked out, and anybody that is in the overdraft for the day, any of the businesses that are caught upside down, we'll hurry and call them, make sure that they know that, hey, your account's in negative $5 grand. Can we either pull off your line of credit or can you bring in the funds we need to get your account current? After that's said and done, usually I'll just start working on the loans that I've already worked on.
You say working on loan, just looking through numbers. What do you mean by? You're in your office, you're talking to them, or you're, yeah, kind of describe that process.
Yeah, good question. So I guess I should put it into context. With a lot of the bigger banks, there'll be 2 people working on a loan. There'll be the credit analyst or the underwriter or the relationship or the portfolio manager. And then you'll have your relationship manager or your loan officer. So those 2 will work hand in hand on their loans. Generally, the credit analyst is more analytical. So if you do like numbers more, you don't really want to get out and network and you just want to really push loans through, you can do that. And banks will pay you if you hit your goals at the end of the year super well. Your bonus will match kind of what your input was. With a relationship manager, you're going out and you're finding the deals, you're networking, you're talking to people and you're trying to find the next loan that you're going to bring in. You'll gather the financials, pass them off to your loan analyst or your credit analyst, and they'll process them and then come back and say, hey, I've got 5 issues here. Can you just work through them with me fast? And so then you go back to the borrower, talk about those, get them all dialed in, and then hopefully you can get an approval from like usually a senior analyst will have to approve the larger deals. You won't be the only one approving them. And you'll get your loan docs, and the credit analyst is done at that point, and it's all off to the relationship manager to go out, close the deal, and make sure that the customer's happy at the end of the day. So based off what you guys enjoy, I don't know if you like to network more or if you're more of an analyst, but based off like a finance degree, you can run it either way. Just kind of whatever you're into. A relationship manager will bonus off of what loans they bring in also as well. So if you bring in big loans, the bank will pay you accordingly. So yeah, good questions. What else?
The rest of your day, is that, I mean, going out, you in the office most of the day, most days, or?
Yeah. So at a smaller bank like DL Evans, like 3 billion, they actually want us to underwrite our own deals. That way, if you have to present it, you actually know what all your numbers are. So in a smaller bank, generally most of them like Cash Valley, DL Evans, they'll have a loan committee. So if your loan is up to a certain size, you have to go up and present your loan to a board of say 5 or 6 individuals. And all 6 of them have to sign off on it and say, okay, let's do this deal. Otherwise, you have to go back and tell the borrower, we can't do your deal. So at the bigger, larger financial institutions like Zion's, there's generally one guy, the head honcho. Zion's was structured so there was somebody at 3 million, and then there was somebody at 5 million, and then you had 3 individuals over that. So based on the size of the deal, you had so many hurdles you had to get through before you could actually fund it. So, and there's like a lot of discussions that go on. But yeah, so I'll underwrite my deals. I ask for the tax returns. I ask for their profit and loss statements. I ask for their balance sheets. I'll go in and get their credit reports and I'll scan it and look at everything I can to make sure that the numbers all line up. The numbers line up. I actually have to write like a little story. That's basically the underwriting. And I have to summarize ratios and basically state all the strengths and weaknesses and then mitigate my weaknesses that are within the credit. So, and then when that's approved, same deal, like I'll go out, close the loan, and we're off to the races. So.
So are you a person that will go out and network, find something? So do you go to conferences? Do you just call people? Like, how do you network?
I mean, there's a lot of opportunities. Like Cache County has its Chamber of Commerce, where you'll have like a lot of businesses that sign up for it because they want the exposure. They would need to network. Like real estate companies or realtors always have networking events. There's a lot of opportunities to just go out and meet people. But yeah, good question.
It's like you got like bonuses, like the loans or whatever. So what does that look like? And then what does the payment salary look like?
So out of the gate, I think for a credit analyst position, I don't know. You probably know better than I do, but 50 grand to get you started.
More,
Is it more?
you probably, depending on the size of the bank, right? 60 to 70 to start. Or in the 70s, right? And then depending, usually even that first year or two, there's training and there's a whole bunch of other things. So you aren't exposed to that much bonus. But kind of once you get past that point, then you start to have more more opportunities, more upside.
Yeah. I mean, I knew pricing like before the pandemic, so I don't really know what it's been like all the crazy stuff that's happened. So at Zion's, we'd get paid out bonuses quarterly, but that's actually changed out. Now they pay out annually. And it was based off of like the portfolio that you're running. So I don't know where they'd land today, but I don't know. It'd be more than $1,000. I could give that to you. So good question.
So this is where I think it depends a lot in terms of what side of it you're on. If you're out getting loans and originating loans, that's valuable and it's highly commission based and people can make huge amounts of money.
Mhm.
If you're on the other side, an operations side, or even just the underwriter, very consistent, more stable, less risky, right? Doesn't fluctuate as much. And I mean, you're getting paid well, but it's not that, it doesn't have the huge upside. But it's pretty steady and better hours. So, so.
Yeah, some of the local lenders in the area, they'll pay you 25 bips of your origination. Well, 25 bips of the origination fee. So say if you did at $1 million loan and the origination fee is 1%, was that 10,000? So then your bonus would be $2,500 just off one loan. But I mean, it's all priced into the job too. So good question though. That's something I would probably look at if I was out looking for a job.
So does each individual person do their own underwriting, or is there a person designated to do the underwriting for all these different?
Yeah, so usually you'll work as a team, so you're assigned, so like a loan officer and their credit analysts will always be together. I mean, that's how Cache Valley Bank is, that's how Zions Bank is, that's how Northwest Farm Credit was. You always work as a team so that you kind of understand each other's expectations at the end of the day. So you probably would want to get on with somebody that you really can get along with. And I'd probably vet the teams that I'm working with if I could. If there's any ability to do that. I think one mistake that I wanted to express that I made in college is I didn't get super involved with networking. Right now, if I were you guys, I would network the crap out of everything and make sure my name was everywhere. The other thing I would do is make sure that I nailed an internship. I grew up on a dairy farm and I just went home and worked every day because I was one of those people that was like, you know what, I'm going to do this without taking out any loans. And I did it, but like at the end of the day, I didn't get any internships, which actually kind of hurt me when I graduated. Because everybody looked at my resume, they're like, you worked on a farm and that's like all you got. It's like, well, you don't understand what it's like, but they don't care. So that would be some of my biggest suggestions would be like, if there's a networking event, go to it, meet some people, have a goal to talk to 2 or 3 new people every time. And just really spread your network open because everybody's going to graduate. And when everybody's done, if you've got a door already open to kind of work into wherever you want to go because somebody else made it, it's like 10 times easier to move around. Another thing that I made the mistake of when I graduated was I just went into everybody's websites and I submitted my resume. And I was like, look. And like, I didn't actually try to wedge my way in. If I was to graduate and I had a great looking resume, I would be pounding down the door and make like a physical, I would physically walk into wherever the institution is and actually make somebody take my name down. I actually saw this thing on LinkedIn the other day. I don't know if you saw this, but this girl is genius. She found out that Nike was having this, it's like a celebration day. So this girl went in and she printed her resume on a cake. And then she took it to the front desk receptionist at Nike and said, I need this to go to this person. And the person was like, I don't know if I can do that. And like, she pulls out the cake and she's like, you will take this. And the person was like, okay, I will take that. And they took the cake off and I believe she got the job out of the deal. But for me, when I've hired people, if you just send me a random resume, it's a lot harder for me to hire you. If you bust the door down and come walking through and say, I want to talk to you about this position, like I'll be a lot more inclined to listen to what you have to say and look a lot closer at your resume.
There were a couple questions. Saw some hand, other hand.
First was, would you recommend going in and just handing your resume to like a receptionist, or would you recommend like emailing someone and trying to set up an appointment and then sit down and talk to them about it? Like,
Yeah.
which would be better?
Do whatever you can. Like the receptionist, I mean, you really need the one-on-one contact. If you can get that, it's way easier to get a job. I've figured out.
I think that's where you network. You find somebody on LinkedIn, you try to find someone that you can talk to, right? If someone delivers your resume to the hiring manager, it's already there. It goes a lot farther than, right? It just shows up in an email.
Mhm.
So that extra bit of effort to network makes a difference.
Well, it just shows the person that's hiring too that this person really wants this job. So if they're willing to go to that much work just to get here, like imagine how they'll be as an employee. So
Best part of your job?
probably when I fund the sucker and I'm like, hey, I just put like 100 grand in your account and we're done here. And they're just like, thanks. And turn around and walk out.
Worst part?
Is turning down a loan. Oh, it's like the worst. especially when you go through you exhaust every option you have and you still can't get it through. That's some of the worst. I guess another rewarding one I did is we had this guy come in and he was working for this trucking company, and he was their he was a mechanic, and he was their I want to say what's the radio walkie-talkie guy? Dispatch. Who said that? Nice.
Extra cookie.
Yeah, no kidding. So he was their mechanic and dispatcher. And he came in one day and he said, hey, I want to start my own company. I want to buy a semi truck and I want to start hauling. And he's like, okay. And like, he tell us the story. And anyway, so we sat down with him, and this guy was making like 37 grand a year, and he had 4 kids. And it's like, how are you surviving? Like it like hurts your heart, like to see somebody like that. But he knew his numbers, he knew what he wanted, he knew what his haul rates needed to be, and he knew what was expected. And like we molded the loan, but we got it done. And at the end of the day, he was super happy. And today he's got 8 trucks. And he's actually doing super well. And stories like that are actually really fun for me. To see somebody that they knew they had what it took, and they really ran with it, and they really succeeded. That's really fun to see, especially when they keep buying stuff, and yeah, it just keeps expanding.
How often do you decline a loan?
Most of the time I can actually get a feel for them within the first 15 minutes, how things are. And I can kind of give them a direction of, listen, like this, there's just no way this is going to work before they can even apply. Again, that's part of the relationship building, is like, people trust you. They know, you know what you know what they need to get the loan done. But I would say super minimal, probably 1 out of like 20. Yeah, it's not bad. But
Okay, we're almost out of time. Any last minute rapid fire questions?
So I work as a loan officer right now. Like, what are some things that, I can do to like help our underwriters, processing loan applications? And then a second part would be like, what can we all do if we need to apply for credit to help out in the underwriting process?
So I would just like have your numbers, like if you got tax returns, have them scanned as PDFs. Like, and it's okay to take your physical stuff in. Like, can you scan these for me? But like, just have like everything submitted in a nice complete package, and just makes it so much easier, so much faster, versus I have to come back and say, hey, you missed your 2020 tax returns. What was your other question?
Just kind of like a point to everyone, like when we're like trying to apply for the credit cards, the auto loans, or things like that, what are the things that we can do to help on the lending side to make the process a lot smoother?
A lot of the times, like, it's just based off of, I don't know, the history that you've already had. If it were me and I was applying for credit cards, I wouldn't go to a bank. I'd go to an actual credit card company, because everything, again, fintech, so much easier and so much faster. I'm kind of surprised how many people we have apply through banks to get credit cards, when banks really don't specialize in credit cards. Like, we could do them, but if you use like a Capital One or an American Express, like, the features are so much more, and your points are actually most of the time way better. So I would just go online for everything.
Anything else? All right, well, thank you, Shay. Okay, so you got till the end of the week to do the write-up. We'll talk about all these things at the future dates, but